By now we know that accounting is a sequential activity which involves journalizing, then it involves postings to ledger, then preparation of trial balance. Now, these activities can be broadly classified as recording, then classifying, and then summarizing. Once these activities have been done, then at the end we are supposed to prepare financial statements and calculate the profits and losses of a business. Now students, that brings us to financial statements. In this chapter we are going to start and learn about the informational needs of various kinds of users and how accounting actually is able to satisfy those needs. What are the various types of expenditures, namely revenue and capital. Similar, what are the various kinds of receipts, that is capital receipts and revenue receipts, and how to deal with these items. Now students, coming to the first topic, that is informational needs of various stakeholders. That is informational needs of various stakeholders. Now students, by stakeholders we mean various parties that are interested in accounts. Now these parties can be divided into various categories based upon their requirements. Like we can have monetary and non-monetary users. Now monetary means somebody who has a monetary stake in the business, somebody who has invested or is planning to invest money. Whereas non-monetary can be something like researchers and consumers who actually want information but are not interested in investing their money. Then we can have active and passive users. By active and passive users we means those who are actively interested in business activities, and passive users means those who are randomly or once in a while they get interested because of their pecuniary interest or their investment needs. Then they can be further classified in the category of internal and external users. Internal and external users. That is those parties who are from inside the business, like management, like the owners, like the workers. They are from inside the business and hence are interested in the financial statements of a business. Whereas external users are like people, you and me, who are outside the business, who plan to invest in the business or plan to lend something to the businessmen. So we are under the category of external users. Then you can have active and passive users. We have already done that. You can have direct and indirect users. Now direct users means again somebody who is directly interested, somebody like owner who has invested a lot of money in the business, so he would be naturally and directly interested in the financial statements. Indirect users like researchers, fellows or chambers of commerce who use these results to derive more meaningful results for the economy as the whole or for the industry as a whole. Such people come under indirect users. But broadly, we are going to study about external and internal users. So let us come to this concept. What are internal and external users of accounting information? The most important classification for users of accounting information is internal users and external users. So users can be of two types, that is internal users and external users. We all know internal users. Internal users are those persons or individuals who are from within the organization. They are interested in the financial statements so as to assess the performance of a business. For example, owners. Owners have invested a lot of money in the business and hence are concerned about the safety of their investments and the profitability of the business. So they are concerned about safety of investment and about profitability. Then we have managers. Very often you will have owners acting as managers, but then managers can be professionals also. So managers are interested in knowing about the results of the decisions that they have taken. Managers are interested in getting about the result of whatever they had decided or whatever they had planned. So hence they want to assess the results of their actions and decisions, or broadly we can say that they are interested in the performance of the business. Then students, coming to external users. External users can be like banks and institutions. Banks and institutions actually imply those institutions and organizations who lend money. Since they are lending the money to the business, that means they would be concerned about the safety of their investments and the ability of the business to pay interest. So they are concerned about safety of credit and interest. Then we have government. Obviously, government levies taxes on the business. These taxes can be calculated on the basis of the profits of the business, so which are disclosed through these financial statements. So they are interested in the profits and taxes. Then we can have investors. It also includes potential investors. They are the people who have invested their money in the business in the form of shares and debentures. So obviously they would want their investments to grow, or at least they would actually want to get an information about what their investment is getting in return. So they are interested in returns on investments. Then we have other categories like creditors and researchers. Now students, creditors are those individuals who sell us goods on credit. They actually lend us certain amount of money on short term basis. So again they are concerned about the financial position of the business, and they can get this information through the financial statements. On the other hand, researchers, chambers of commerce, they are interested in knowing about the financial position of the economy, of the industry. So as such, they would actually want certain information out of your financial statements. So broadly, the users are internal and external users. Internal users from inside the business and external users from outside the business.